So, good morning, everybody. We are happy to have the real estate roundtable here that we're discussing commercial issues and how the recent coronavirus restrictions are affecting the market. We have with us this morning a number of different top professionals. So, Kevin Dreiling is with us here this morning. Kevin is president of Landmark Commercial Real Estate. We also have Tom Johnson. Tom is the president of NAI Martens. Gary Oborny is the founder and CEO of, am I getting that title right there, Gary, of Occidental Management?
Yes, sir.
And then we also have with us Dan Unruh. He's on a phone line for us. He is the founder and president of InSite Commercial Real Estate Group. And finally, we have Tony Utter, who is Senior Vice President of the Commercial Division with JP Weigand. Is that correct?
That's close enough.
Close enough to get it. We've got lots of good titles there. So this morning we wanted to talk about how the commercial industry is adapting, and that's a very, very widespread. There's a lot that's included here within that commercial industry. So let's just go ahead and get started. And I'm going to start since I see Kevin's face here first. I'm going to go with Kevin and say, Kevin, how is your office adapting and just handling the restrictions and the things that you have and managing social distancing and so forth? Got to unmute yourself there.
That's what I was doing. Sorry.
Very good.
So from a day-to-day basis, our office is doing what I would guess most everybody is doing. And we've asked our people to remain from coming into the office as much as possible, especially our agents. We've restricted access to the lobby, just done the things we think are the right things to do but still going about our business from day to day. Most of our meetings, if not all of our meetings, are done remotely now. We're having them more frequently. We have a property management group that's out there when they can be looking at the properties and checking on the properties, but when they're not doing that, they're typically working remotely. And as much as possible, business as usual. We're answering the phones. We're getting things out there as we can, still doing our marketing and trying to be going through the day-to-day as best we can.
Very good. Very good. Gary, you have a little bit of unique perspective from a lot of the people here because you've got so much going on up in Kansas City. And so you have a few days early head start on some of the restrictions and so forth. How's your office handling it, both here and the folks who are up in Kansas City?
Well, from a real estate standpoint, we're deemed essential services. So it hasn't really changed a lot for our people from a standpoint that, we've got a 4 million square foot campus to run. And of course, with OPX, it has a fulfillment center with United Healthcare. So they run 24/7 with pharmacy. So a lot of our operations up there, fall under that category. So that hasn't changed a lot for us. Obviously, with large corporate users, a lot of them are working from home beyond their essential services provider, like Sprint, who has to provide telecom services. So there still is a certain amount of people. What we're doing now is we've had a couple, confirmed cases on a campus when it's, you got 15,000 people there. So obviously our sanitizing things, all these corporates are very sensitive to that. So we've increased all of our janitorial and sanitation type situations have increased fourfold. Our reporting on and communication has increased fourfold. So it's really become just being very focused on how do you operate during this particular situation. And so we've had to adapt there and bring on more people to really create a situation where we're monitoring every day what's happening.
Very good. Very good. Tom, let's go over to you. Can you tell us a little bit about how NAI Martens, and of course you've got a couple sides to your business there, not just the commercial brokerage side, but also the appraisal and some of the property management, and you've got some of the apartment properties and so forth. So can you tell us a little bit more about how that's all working?
Yeah, we made the decision last week that we would close our office effective Monday. We spent all of last week essentially testing our technology and our communication systems, and everyone essentially left the office over the weekend. Our marketing staff is working remotely. They'll be able to continue to do exactly what they were doing in the office as far as getting out our marketing materials. We've got a couple admin people that come in on occasion to handle accounting functions and to get commission checks out. And, you know, we set up a system to get our mail, to get our FedEx, to get UPS. The advisors come in on occasion. We haven't totally shut the office down where people can't come in, but they can come in and you know, pick up files, make some calls, do what they need to do in the office. But for the most part, they've all been operating remotely. We've continued business as usual with regard to all of our meetings, our brokerage meetings, our practice group meetings. We had our new advisor development team meeting Monday via Zoom. We had a partner meeting on Tuesday via Zoom. We'll have our brokerage meeting next week. All of our advisors have talked to their clients. Everyone understands we're working remotely. Quite honestly, we haven't had that many people even last week coming into the office. So in the best interest of stay at home, we made the decision to close the office. And to date, obviously we're only 4 days into it, we have really seen no change in our business. I mean, everything is working smoothly. We've had no real issues. We've had no real negative feedback from anybody in the chain, whether it's you know, prospects we're working with, clients, staff. I think we're on top of it at this point, and hopefully it continues to go smoothly.
Excellent, excellent. Tony, would you like to give us a kind of highlight of what's going on over there at Weigand and the things that that you're seeing? And of course, if you can touch on anything new that's updated since last week with the residential division, I think people would be interested in that as well, although I know that's not your primary area.
Sure. Isn't it ironic that we're having a virtual roundtable panel discussion on the internet remotely to talk about the effects of the pandemic and how it's affecting our industries and how we're doing so much remotely now too. And I find it reassuring also that this is the 4th day that Martens Companies has closed their offices, and Tom Johnson's not just sitting at home at his kitchen table in his pajamas. He's working hard. Tom's a warrior.
I was yesterday, Tony.
I'm sorry, Tom. I couldn't resist. But we have adopted similar practices from what you've heard from the other gentlemen so far. We're limiting and monitoring access to our downtown commercial offices. So the receptionist has the doors locked, but she can see clearly anyone who comes to the door. I asked her yesterday how much foot traffic we've had. And she said, the only foot traffic we've had have been the mailman, UPS, FedEx, coffee delivery, and such. We really haven't had any foot traffic. And it made me realize too, that we're still getting a lot of business done because we do so much remotely. And we'll talk about that more later on in this discussion, I know. For our staff, we have approximately a dozen staff members and employees, and they've all been coming to the office each day. We're implementing a policy now where they will have the choice to either work from their office, here at our office, or at home, and monitoring with timesheets and such, or maybe a hybrid, a combination of the two. So they'll be able to continue to work with their agents as administrative assistants. We have approximately a little over 20 agents here who are doing representational transactions, and of that number, maybe 8 to 10 have been coming in consistently. The others are working from home or remotely, and those who are working in the retail sector are finding a serious impact on what they're doing. But for the most part, we're able to conduct business as usual with some limitations.
Very good, very good. Dan Unruh has joined us via the phone, and so I'm not going to be able to highlight his video on that. But Dan, if you'd like to share with us some of the same things in terms of what your office is doing and how you are trying to address all of these issues?
Sure thing. Is my signal clear?
Yeah,
I
we've
was
got
having
you
trouble
good.
on my inbound.
I can hear you fine.
Yeah, I have a face for radio anyway, so that's probably good that I'm not on the screen. But as far as our office, very similar to what you're hearing from everybody else. Our policy is to allow people to make their own decisions as to whether they come into the office or not. Most have opted to work remotely, work from home. Everybody's taking this situation very seriously, very cooperatively, and we're finding that, we're making the best of it. Our staff, they have the option to come in and work or work remotely as well. And for the most part, productivity has managed to stay pretty consistent with what we had before. It's just maybe taking a little longer to get, communication, because, the collaboration when you're one-on-one with people in the office is so much better than if you're trying to do things electronically or, remotely. So, but it's working out. We're able to serve our clients. We're able to, pretty much conduct business as usual with just a few variances.
Very good. Well, Dan, I'm going to stick with you for just a minute. I think all of us, at least I personally, have been extraordinarily concerned. I'm an economist, so I look at the economy side of things, and I've been very, very concerned about the economic fallout and the impact that it's going to have, especially on small businesses in the community. And since you've got a lot of different projects around town with tenants, then I'd really appreciate to hear kind of what you're seeing among your tenants and your clients in terms of how they're going to manage that, and how do you plan on managing that in terms of those who have struggled paying rent and so forth?
Great question. I think to all of us, this has been a kind of a kick in the gut. I know even in Washington, people have really struggled with what is the appropriate response to this challenge, this crisis. As it relates to our local investments, our local tenants, it's been interesting. We've had some that have been quite transparent about, listen, my business is down to 50 people. And then the next day they call up, well, my business is closing. I can't pay you rent. And so, fortunately, most of our projects are diverse, but we do have some that are a little bit more heavily, weighted toward the restaurant businesses. And of those, we have some that are, like I say, completely shut down. We have some that are just limited to drive-through only. And so what we're seeing is, I guess, commitments from our tenants to do their best. They're trying to work with us. They're being transparent. They've given us commitments about making us whole or paying a portion of the CAMs, triple net charges, things like that, which is reassuring. But I think one of the things that's been particularly beneficial to us and reassuring is our lenders have been very cooperative. They understand the situation, and I think they saw it maybe coming a little quicker than some of us did. And they've been quite willing to modify loans to either do interest-only financing while we're in the short term, or they are, in some cases, have suggested the idea of deferring payments outright. We haven't gone there yet, but I'm sure that some folks might take advantage of those opportunities if they're available. All in all, it's a wait and see kind of situation. We are in uncharted waters. Nobody really knows how long this is going to take. Nobody really knows how much cash is on the balance sheets of these tenants. And, they've got their priorities. They're taking care of their people first and foremost, which I think is the right thing to do. And then beyond that, it's just get in line and hope that there's plenty of money to go around. And with Washington working and getting a bill put together, hopefully that will turn into some good results for the small business folks out there that are really struggling with these new rules. So we're hearing some good things, and hopefully some things will come out of that.
Very good. Thank you. Gary, I know that you have a lot of properties around the community and also up in Kansas City. So how are your tenants and how are you working with them to deal with that? And then also on the flip side with your lenders. So what do you see there?
Well, I think it really depends on what category they're in. If you've got the large corporate users, on the office side, we're not seeing a lot of issues there as far as payment. Obviously, they're going to be looking at the stimulus package and other governmental type agreements in order to help their situation out. Typically, their balance sheets are a lot larger, and so those aren't really a issue. Your regional and your local tenants are the ones probably feeling the most stress. Obviously, the hospitality. We're engaging daily with David Tolan, who's the Secretary of Commerce for the state of Kansas, and a number of the secretaries, along with the governor, in the different areas that we're at. Here's an interesting statistic. On the hospitality bill that they put forward in the executive order of $5 million, there was 1,400 requests for hospitality engagements with them, and they were only able to fill 346 requests. The most was about $20,000 per request, and they burned that $4 million up in 24 hours. So obviously, hospitality, restaurant, things of that nature is the largest stress area in the state right now, and really needs some help. We have some concerns that we're voicing with our federal Senate and House representatives, along with our state, in regard to disruption insurance provided by the insurance companies, who for the most part are not wanting to, in some cases, honor those disruption for this particular issue, or have cut out provisions in their insurance for those. I think there's going to be a very large discussion about insurance coverage for business disruption that our national representation politically will be engaging with. Either the federal government is probably going to reimburse insurance companies, or they may hold insurance companies to particular responsibilities when it comes to disruption in those areas. So the stimulus package is going to be very, very important for everyone involved. I think there's a large discussion about force majeure. What does force majeure actually mean within your lease documents? So, does that mean this particular issue? Does it mean the rent payment? Most of our documents have force majeure is not included as a rent payment, but I'm assuming landlords have all different agreements when it comes to force majeure. There's going to be a large discussion in regard to that. So those are going to be interesting topics to discuss and see where they fall out. But I would say your local and smaller regionals, depending on what sector they're in, is very, very heavily stressed. I think your larger corporates are not at this point. So those are going to be the interesting topics coming up that people are going to have to decide. Talking with KBA, which is the Kansas Bankers Association, we are involved in a banking ownership situation. So what we're seeing there is the KBA and the FDIC are not marking down banks if they have to do extensions or do deferments on payments. And what we're seeing is most of those banks are offering 60 to 90-day deferments on principal balances. You'll still have an interest rate that will continue to tick against you, but they're looking at being flexible on deferments, mainly because the Kansas Banking Association, the FDIC, are not going to hold that against banks or the sponsoring borrower.
Very good. Very good. Gary mentioned something about force majeure, and I thought we actually have a participant here today in the meeting. Trish Voth is with Folston Seepkin Law Firm. Trish, I thought maybe I could put you on the spot here at the last minute and just say anything you want to say about that. I know you all have been sending out daily updates on how businesses and companies should deal with that, and I'm sure you've been focusing all on the real estate side. So throw it back to Trish and make sure that you're unmuted there.
I believe I'm unmuted, and I'm not here to hijack your meeting. Good morning. Actually, the topics that Gary mentioned are majority of what we are seeing, and specific to your question, yes, a range of force majeure issues. as Gary described, you have to start with what's in your documents. So we've got basic law. Force majeure generally is narrowly construed. And so you really do have to rely on your documents. There are some other legal theories, even if your documents don't apply, such as frustration of the intent of the agreement and a couple others. So there are additional theories on making a claim, but these are contractual claims, so you have to start with the content of your documents. One other topic that I don't recall being mentioned is access to the court system. That's certainly something we're monitoring. You probably all saw the update on the governor's order to narrow the evictions and foreclosures that are stayed. However, because of the limitation of the court system, the type of business you can get done, that practically is impacting some other commercial actions in the court system.
Very good. Very good. Thank you very much, Trish.
Sure.
Sorry to put you on the spot there.
No worries. Happy to answer questions anytime.
Tom, I'm going to come back to you because Gary had mentioned the impact on the hospitality industry, and I know that you over at Martens there do have a number of different properties and developments in hospitality and the hotel industry. And so, do you want to share anything that you can there?
Well, I can share what I know, and you know, Steve is obviously much more active in that. You know, the issue obviously is occupancy. You know, the hospitality industry has probably taken the biggest hit of any segment over the last few weeks, and it continues to ratchet down a little bit. I'm sure, and I can't speak for Steve or the industry per se, but the programs that are out there are going to be taken advantage of and trying to limit the opportunities. We've seen, you know, continuous, fairly good occupancy from the business community in some of the smaller markets that Steve is in. We've really seen, I think Steve has seen a downturn in more of the pleasure travel and you know, tourism type of occupancy. But each week that continues to ratchet down a little bit, and they're just going to have to monitor it, look at the programs. And like I said, Steve's been much more active in that, but I know we're being very proactive in terms of how we're managing the properties and the issues that are popping up.
Very good. Kevin, I'm going to come back to you now and wanted to ask, you know, you've got a property management division there. And so just how do you see your tenants and those who are involved in these properties responding? And are there areas of particular concern that you have?
Well, there's no doubt that, as Dan was alluding to earlier, that especially in the retail sector, tenants are struggling. They're having to close. They're having to cut back hours and staff. And so we're seeing that on the property management side, them coming to us in different ways, shapes, or forms, whether it be a call, an email, a formal letter, depending on the size of the tenant, that, you know, if they're a franchisee of a national credit tenant. And I've been talking to some people around the country that I've been working with in the past, and everyone's taken a different approach. Some of them are, can you help? Can you help us? Others are very aggressive. We're not paying rent. And we'll see what happens. And then others I've heard of others that have come with a solution, or at least an opportunity to here's our solution. We need some help on the short term. No one knows how long the short term is, but at least for the next couple of months. So we'll put it on the back end. So every individual tenant has been different, and you just have to keep the lines of communication open from a landlord side, from the property manager side, from the tenant side. Just understand, you know, we just don't know the depth of the situation. We know the short term, we just don't know the long term yet. So everyone needs to be patient, and you know, we'll see through it.
Very good, very good. Tony, I'm going to come to you now. Same question in terms of anything you see with that, but I'm also going to start to pivot it a little bit and ask, are you seeing anything in terms of investment activity and what potential investors are doing? And I'm especially curious how 1031 exchange issues are being dealt with in terms of the time limits and so forth, that if somebody was doing a deferred exchange, is this really interrupting or disrupting what they're doing? So kind of hit you out of the blue with that one, but see what you can do with that curveball.
I'll address the investment question last. and address the impact that this situation is having on the various commercial markets. And of course, in commercial real estate, you don't just have a market. You have office, industrial, retail, hospitality, multifamily, land sales, 1031s, and so on. So, and then since all markets are local and unique to their environments, there's also those differences and challenges. So far, we haven't seen much of an impact on leasing and sales of office and industrial properties. We have several land transactions now where the contracts were executed. We'll address more how this is being done remotely. But the retail sector, restaurants in particular, and hospitality, of course, has been addressed. So I'm going to talk a little bit more about the restaurant and retail properties. I noticed in the newspaper this morning that the Eagle said that Pizza Hut, KFC, and Taco Bell have temporarily closed over 7,000 restaurants. And that's just one PepsiCo company who has restaurants. Think about all of the other chains and regional organizations that have restaurants. And of course, we're not seeing a lot of sit down, if any sit down restaurants. What we are seeing are carry out, take out, and for the first time deliveries. For example, one of the properties that we manage, we've started receiving inquiries from tenants as much as 5 or 6 days ago, asking for relief help on the rent. This particular property is owned by a national real estate investment and brokerage community who has over 200 properties nationwide. They're receiving so many requests, they actually developed a template for us to email to those tenants who are asking for relief. So we've started issuing those too. One of the restaurants in a property that we manage called me, the owner, one of the owners did, and said, and they've been open in this location for almost 25 years, and he said, we had 2 customers last night. Now this is when they could still do some sit down business. So now we're doing carry out and for the first time ever, delivery. So I think the restaurant retail sectors have been hit very hard. I had a discussion last night with Lisa Lowry here about the impact on the restaurant and retail industry. Even those of our agents who are working from home and who work in the retail and restaurant sector are saying there's not a lot to work on for them at this point. So that's the impact that we're seeing. As far as investment properties are concerned, we just signed 3 contracts for land sales, and they're all for investment purposes. So we did everything remotely. I'm not hearing pushback or resistance or lack of interest from investors. If a property is a quality property, good location, has good occupancy, good cash flow, good net operating income, they're going to continue to attract attention, especially since we all believe that this is just a matter of time before it'll be business as usual.
Very good, very good. Well, Dan, let me come back to you and ask that same question about investments and what you're seeing in terms of investment activity, but also what you're seeing in terms of I'm particularly curious about 1031 exchanges and whether or not some of those deals, because of the time limits, are being impacted or creating challenges for people.
Yeah, it's a little too early to really gauge the full effect of this crisis. We've been in a shutdown situation for 11 or 12 days. It's going to take a while to sort all that out. But I will say that, the 1031 investors out there, they have, significant motivations to move forward, crisis or no crisis, and they're going to do what they can to meet their timelines. I think what you're going to see more and more in the short run is cash investors mainly. Cash is king, as you know, and this is a market globally now where those who have the cash are going to have the opportunities to take advantage, for lack of a better word, of people needing to sell. There will be some opportunities like that out there, and those who have the ability to not have to pass the scrutiny of anybody else except their own investment strategies, those are going to be the ones that do well in a situation like this. It's just too early, I think, to really gauge what's going to happen in the investment market. Things that are already in the sieve, so to speak, they're going to work themselves out, but what's going to happen 30 days from now, 60 days from now? I think that once you have some clear direction on whether or not the curve has been flattened, you'll have a lot more consumer confidence. You'll have a lot more business confidence. If businesses can get back open again, you're going to see a great deal more activity in the investment arena. But for now, I think it's the cash money buyer that's going to be the one who is most active in the market.
Thank you very much, Dan. Gary, that kind of brings me to a question for you, because it seems to me in always in times of stress, there are great opportunities for those who are in a position to be able to do it. So what are some areas that you maybe see as being potential opportunities for investors as we emerge through this crisis?
So we tend to look at it from a micro and a macro standpoint. So there was already micro opportunities that were happening in a regional or national basis for value add or opportunity buys. Now what we've got is, because of this crisis, we've got more of a macro opportunity. So what that means, there's going to be a lot more opportunity to sift through and look at. The key will be capital that's willing to commit. It's going to be a key of banking that's going to be willing to commit to provide the financing. Because at the end of the day, you're going to take a look at those opportunities from an income standpoint. What is in place? I think that you're going to see more of a mark-to-market concept where people actually look at the market and say, okay, what can I count on? What can I not count on? There will be a number of these more local or mom and pop type operations and some regionals that probably may not come out of this healthy. And so I think that your analysis of what mark to market is going to be really, really important. Is that, as it stands today, or is that as it stands 30 days or 60 days from now with fallout? So you're going to have to be really calculating about what that real value is, but it definitely will be there. These blips on the radar that happen over a long period of time tend to be opportunity situations, and they'll be there. You'll just have to be very calculated about what you do, but they definitely will be opportunities.
Very good. Very good. I did get a chat message from Trish Voth over at Fulton. She said she did communicate with the Sedgwick County Register of Deeds this morning, and that all e-recordings and updating of land records, all of that is proceeding without any slowdown. And so that's a good news in terms of things being able to continue to process and move. And that's a good reminder that for those of us who are watching and joining us, if you want to, down at the bottom of your screen, you should see an option for chat. And if there are questions that you want me to ask of the panelists, then please feel free to send that out, and then I can pass those on to our panelists to answer those questions as well. Kevin, I think I'm going to come back to you now. And I wanted to ask a little bit about what we're seeing in terms of leasing activity. I'm assuming right now there's probably not a lot going on in the retail sector in terms of people wanting to lease new space. But one area we haven't talked about is impact in industrial. And I don't know how much you can talk, but we'll come to some of the other people as well. So are we seeing anything with leasing activity in terms of potential tenants or things trying to move forward with plans?
There's no doubt that things have slowed. I wouldn't say things have ceased. I would say in the category of industrial, it has been the least affected, at least in our office. We're still seeing activity from the investment side, the leasing side, sales side. Again, it's still early to tell, but I would say that that part of the industry has been the least affected at the moment.
Very good. Very good. Tom, you want to jump in on that same question there about how leasing activity and so forth has been impacted in different sectors in particular?
Well, I think I'd agree with Kevin. Industrial is probably the most proactive right now. Office is sitting kind of in a holding pattern, and you guys have all discussed pretty much what's happening on the retail front. We're experiencing the same thing. Of deals that we have underway, probably the biggest issue is some delays in some due diligence, trying to extend. We've got one situation where the tenant had negotiated 2 to 3 months of free rent. They've come back now and said we'd like to have 4 to 5 months of free rent to try and go through this process. So, you know, we're going to see those negotiations on deals that are in progress to let everybody get a little sense of where it's going. I think everyone's talked about, we have no idea how long this is going to stay in place. And so everyone wants to try and put in as much slack in the process as they can. You know, our president says we want to be back in business by April 15th. I'm not sure we're going to make that deadline, but I think that everyone is looking now to kind of hunker down a little bit and see how long this lasts and continue to work through deals, but look at the terms and try and extend those terms to their benefit and try and keep, you know, business as usual as much as we can. You know, we're continuing to communicate with our prospects and with our clients and with our landlords and continue to stay in the loop. And I think everyone recognizes that, you know, there will be light at the end of the day. The problem is just how long this is going to last.
Right, right. Tony, you want to jump in on the same question there in terms of leasing activity and especially different sectors?
Yes, definitely. I would agree that the industrial market has been largely unaffected at this point anyways with respect to investment or leasing or sales. Office, I had an office showing yesterday for a lease to an attorney at a small downtown office building. There were 4 of us there. Everybody is pumping elbows instead of handshakes, keeping distances, answering questions. Had a showing, 3 showings in fact, of a small office building downtown that we have listed for sale. So we're still seeing some showings in the office and in the industrial and land sales. One of the complications we've had, I think somebody just touched on cash being so critical. I think it might have been Dan. And we do have one transaction where we have an executed contract. There's no financing contingency. They have cash. The due diligence has been completed. We're going to close in 10 days and everything will be done remotely. They're going to wire the funds to the title company. We have 3 other contracts that involve land sales. Well, one is an office building in Wichita. The other one is a biodiesel plant, and the other one is an office warehouse at a nearby suburb. All of those contracts have been executed, but because this particular buyer deals in international business, international banks, foreign countries, they haven't been able to wire the earnest money funds, so technically we're out of contract. Fortunately, all of those sellers are working with us and they understand the complexities involved in this. And one of the things that I noticed was, well, a bank may be open, the tellers are in place, the drive-through window is open, but the bank signatories are not there. And that's complicated the process somewhat too. The retail and restaurant end, again, severe impact on them. I got to thinking yesterday after I showed this office building, what other office-related tenants could be impacted by this? And it occurred to me, those who do business by appointment, such as counselors, psychologists, massage therapists, and so on, their business is changing drastically. And so we're expecting to hear from them very shortly, asking for some kind of rent relief or cooperation. And one of the comments that was made earlier might have been Gary, that this, in small ways, this reminds me of the savings and loan debacle in the 1980s, where loans are very difficult to come by, cash was not available, and a number of people lost their properties or closed their businesses. But when others have misfortunes, those are opportunities that are created for others. And fortunately, it's seems to be a zero-sum game in that respect. But I think everybody involved in this business, in this industry, the commercial real estate industry and business and banks and such, remain optimistic. Everybody is working cooperatively, and I know we'll get through this and come back just as strong as we were.
Very good, very good. Well, I want to respect everybody's time, and I haven't seen any other chat questions that have come up. And so I think what I'd like to do now is just go and see if there's any last comments that any of our panelists would like to share with us. So I'll start with you, Dan. Dan, do you have any final comments or thoughts that you have that we haven't discussed yet?
Well, I think, first of all, let me say thank you for putting this together. I think it's very helpful for people to discuss things openly and honestly about what's happening, and it's really good therapy, if nothing else, to get it out there and hear what other people are saying. But with respect to the market, I would just say this: in our industry, now more than ever, people really need the services of a trusted, skilled, experienced advisor in this business. And in good times or in bad times, there are a need for real estate services. So I think our industry is going to be fine. I think that, if we provide the right counsel, our clients are going to be fine. And we just have to hope that, we find solutions to these terrible pandemic issues and get back on our horse and ride. But overall, we remain very optimistic. I think our market in Wichita is very entrepreneurial. I love that about our community, that we find ways to make things work even in the worst of downturns. Our aviation sector right now is really challenged. And I'm sure everybody that works alongside those folks and benefits from their relationships, they're suffering as well. But we are a resilient economy. We are a resilient population, very entrepreneurial, and I'm actually very optimistic about coming out of this okay.
Very good. Very good. Well, Kevin, would you like to jump in with any final closing thoughts that you have?
I don't know that I can say it any better than Dan said it. I mean, I think patience is key. Patience is key. We'll get through this. We don't know the timeline. Look at the big picture, and it'll all take care of itself, and it'll take care of itself in a better way. So I just think, again, that I'll second, I guess, what Dan said. We'll get through it. It's time for the people in the industry to really step up and be the advisors they've always wanted to be and need to be, and we'll be fine.
Very good. Very good. I actually did get a question here that came online, and it was to ask Andrew Nave about how this is impacting local economic development requests. So Andrew, I'm going to come to you, and if you're don't want to speak to it or anything, then please don't feel badly about that and say no, I'm not available. But we're gonna spotlight you, Andrew. Would you like to share anything about economic development impacts of all this?
I'd be happy to, guys, and thank you for letting me listen in. I realize, working informally, remotely with everyone wearing a baseball cap and just coming as is, I thought I would be in the meaty part of the curve with this group, but I've been on 20 Zoom calls over the last 3 or 4 days and haven't seen 2 sport coats until this morning. So I'm glad to see all you guys nonetheless. From an economic development standpoint, it's obviously, like in commercial real estate, it's a really crazy time right now. We're working feverishly to support our private sector companies across the variety of industries in the region. We're working to support our public sector partners, as you can imagine, and we all are interfacing, as Gary referenced, with federal delegation, local delegation, with the stay-at-home order. Obviously, we were communicating that pretty rapidly with our partners. It's just a brave new world with our public sector partners. I mean, I talked with some of the city manager's office yesterday, and economic development is always important to this community, but right now they're really trying to keep the lights on. We're trying to keep the police and the sheriff's officers on the streets with childcare and some things like that. So some of the things we've been doing, we've been working, you've probably seen the news the last really 36 hours on PPE, personal protective equipment, and getting out the word about how desperately that's needed in our community. There's a lot of talk and a lot of really cool, interesting stories around the country and around even the state with finding manufacturers and companies that are stepping up, producing the masks and producing hand sanitizer and whatnot. There's a desperate need for that here in our community, for our public health officials, for hospital systems. I mean, it's a desperate need. So to the extent that your clients or your contacts have any of that, definitely point that to the county or feel free to point it to us. But that's something we've been working on. Late last week, we provided a lot of data as we knew it at that time, but data about kind of the state of the economy in Wichita to our federal delegation, to specifically Senator Moran's chief of staff and his team as they were working on the stimulus bill that passed the Senate late last night, even this last weekend. Our hope is that passed the House this Friday. You know, we're communicating as quickly as we can and as rapidly as we can the information that's out there. I'll tell you that I just got off another call this morning with the Kansas Department of Labor, and they're seeing historic unemployment filings, as you would imagine. I heard a stat this morning on the national news that I think there's 2.5 million unemployment filings in this country over the last time period. That's, you know, an average would be 200,000. I think the historic high has been 800,000 or 900,000 in the 2008 economic crisis. So we are, as you all well know, in completely uncharted waters. But we're continuing to push. We're continuing to really communicate in this moment. A lot of our project activity prospects that were evaluating Wichita, all of that got frozen. We had, off the top of my head, 2 or 3 companies that were coming in from out of state. All of those trips got rescheduled. Every single one of the conventions and trade shows that we go to promote Wichita, all of those have been canceled, including the Farnborough Air Show, the big one that we go to every summer. That's been canceled, you know, and it rotates with the Paris Air Show, so that's off for 2 years. So again, it's just a crazy time in economic development. We're talking to our economic development counterparts across the country, evaluating how to support businesses and how to just kind of communicate and get the word out. So that's pretty much it. I know Jason Gregory's on the call too, and he might be able to share more about downtown or some of the things that the Riverfront Legacy Master Plan and some things like that are going on, if he's still on the call. But yeah, we're here to support you guys and to support the business community, because again, this is not a situation that any of us expected.
Very good. Thank you very much, Andrew. I appreciate it. Tony, can we get you for any last comments that you have?
Yes. I think we're all fortunate and blessed in this industry that we can continue to transact business, pure business and commercial real estate transactions remotely. I realized a few years ago, and I think it's emphasized even more by today's situation, that we probably do 80 to 90% of our commercial transactions either by email, DocuSign, electronic signatures, text messages, phone calls. So most of it's being done remotely, and we are in a situation now where we can do our transactions almost 100% remotely. So we expect to be able to continue to do business and to do some good business. There might be some reduction in transactions, particularly again in the restaurant, retail, and hospitality sectors. But there's a high level of trust in the commercial community. We all work together. We're looking forward to continuing working together. And all 5 of our companies, for the people who are on this call, have agents who are currently working on transactions together. We expect those to continue.
Very good. Very good. Tom, I'll come to you now for some final comments and thoughts that you have.
Well, I think everyone's well said as to the status. I think the only thing I would share is, you know, we're in a period of time right now where communication is essential. And, you know, in our business, that's the essence of what we do, is to communicate with each other, the clients, the lender community, our prospects, and keep them advised and informed, and stay very proactive in the process, because all of us know that this will come to an end at some point down the road. And we really want to make sure that, you know, the community knows that we're open for business. And as Tony pointed out, you know, we are in a virtual world right now, and we can conduct business remotely, which is a real plus going forward. So I think, you know, our attitude has to remain positive, proactive. You know, we know that there's going to be issues that just can't be resolved with clients or prospects, and we have to be sympathetic to that process and do what we can to encourage everyone to go forward and be upbeat and positive. And hopefully, you know, when this thing turns and that curve flattens out, we'll be back to business in short order.
Very good. Well, Gary, I'm going to give you the final word here. So what would you like to share with us as kind of final thoughts before we close out this morning?
Sure. So just like, you know, the terms cash is king, communication is king here, I think information is king. So everyone should look at the executive order and really understand the details of that. They also need to look at the stimulus bill that's going through Congress. There are a number of items in that bill. We started looking at it. It's 1,400 pages, so it's a long read. But there's a lot of details to it. Some of those items that are very, very beneficial towards commercial real estate. So some of the things, one of the issues that a number of us had been battling federally was the 2017 Tax Cut Job Act, the Qualified Improvement Property Provision. I would just note to everybody that there is a fix for that. So you want to take a look at those incentives as far as going back and probably refiling your taxes in regard to the 39-year depreciation period for that. That's going to go back probably back to 2017. So there are going to be some nice benefits for everybody. In regard to deductible business interest is going from 30% now to 50%. So there's a lot of items that have been in this bill to help out commercial real estate. So I would strongly suggest that our membership take a look at that stimulus bill. It's going to provide you some relief in a lot of different areas for you and potentially your tenants and businesses that are involved. And so understanding that particular bill is going to be really highly important to our industry. So with that being said, I think the stock market right now is at up 950 points. So obviously a lot of volatility. The market's starting to look at, where's the time frame. So we've started doing aggression analysis where we're looking at what does this look like if it goes 30 to 60 days? What does it look like if it goes to 4 to 6 months? And what does it look like if it goes to 1 year? What kind of impact might that look like on our company and opportunities? So I think doing those analysis and those risk assessments right now are prudent for everybody that's in our industry, and look at what that might mean for you and how you might pivot or adapt your strategy going forward. One from an opportunity standpoint, and one from making sure that you're operating the business correctly. So, there's opportunity, there's pitfalls, and we need to be very prudent about how we're looking at things.
Thank you very much, Gary, and thank you very much to everybody. I want to make sure everybody is aware that you need to take social distancing seriously, and so I've really tried to separate myself as far as I could from everybody else. Seriously,
Stan, are you the king of the world?
I am the king of the world right here. Seriously, the video from today's session will be available later today on the Center for Real Estate's YouTube channel. I'd encourage you to subscribe to that channel when you're there. It'll help us get our own little URL for that. And for those of you who are watching on the live stream, we're sorry I missed just the very beginning. I'm newbie to doing things like that. But again, the whole video will be available a little bit later this morning. And I want to thank all of our participants for joining us today. We will continue to track things as they go forward and see if we need to do another one of these in another few weeks. So thank you all and have a wonderful day.
Thank you, Stan.
Thanks, Dan.
All right, gentlemen.
All the best, guys.